we're going to talk about the 3 essential pillars you need in order to become a professional trader. Let's get it started. Alright, what's up guys? My name's Hunter, this is Hunter FX, and you're tuned into the most elite Chad alpha male trading channel there is on YouTube. This is going to be the absolute best channel for you to ever subscribe to, partly because I'm cocky, partly because this is good information. Now then, if you're not subscribed, please go ahead and hit that subscribe button so you can join in on all of the future content. I do live streaming every Monday to Friday. In these live streams, you're going to learn kind of exactly what the methods I use. I do keep a little bit of things up to mystery, and I slowly give you guys a little bit more and more here and there. But you can learn how to trade from those live streams. Today we're going to talk about the 3 pillars. And basically you need all 3 of these pillars to stand up. Kind of like, I don't know, one of these Roman cathedrals where you need the 3 pillars or it's going to fall down. Whatever. That's a bad analogy, but let's get into it. Now, first of all, guys, the first pillar is going to be the easiest. I can break this down to you in such a very quick way. It's basically going to be risk management. Now, with risk management, there's only really one thing. It's very simple. You're going to have to basically be able to manage your risk properly so that you don't go bust. I have a ton of other videos covering this, and I keep repeating the exact same thing, so you guys should check out these other videos as well, but I'll quickly go over it here. Essentially, you want to be betting very small amounts so that worst case scenario in each trade you lose 1-2%, something like this, right? And then that way, when you go on these losing streaks, like hell, look at the stock market right now. This has really messed up the liquidity in the forex market, and I've just been having a hell of a time trying to recover myself because things are fluctuating and my strategy's not working the exact same anymore. If it wasn't for my proper risk management in the first place, I would have completely gone bankrupt. Now, I had about a 10% drawdown at the worst because I was risking about 1% per trade. Now we're doing better. Now I've got things back on my feet because that's the crucial thing, is risk management. So I have a formula that I've actually put in the description in the Discord. So you got to go to the Discord, and then it's on one of those channels. It's the formula. A lot of you have already seen this before. If you haven't, please check it out. And it's basically going to be the formula to teach you how to calculate how to manage 2% of your risk per trade. Now, how you do that is you go, a very simple formula, your position size, so that's how much you're going to bet, is going to equal your total capital, so let's say $1,000, times how much you want to risk, 2%, so 1,000 times 2, divided by how far the stop loss is away from your entry. So if your stop loss is 1% away, then it's going to be 2,000 divided by 1. Very easy. I'm just doing this in my head so I can give you easy numbers. It's going to be 2,000 is your position size. Now you convert that to lots, and you just divide by 100,000 to convert it to lots. If you're using a different contract size, like you're trading on BitMEX or you're trading some sort of crypto or something like this, you're going to have to convert different contract sizes, right? Now guys, the next pillar is going to be a little bit more complicated. And each pillar is going to get a little bit harder to do for yourself. The next one is actually developing a winning strategy. And this can basically be done either by copying someone or developing your own. So this can take a little bit more work. You're going to have to, first of all, go in and backtest this strategy with as many data points on as many pairs as possible. And I'm talking about even if you're copying this from someone else. Because if I tell you a strategy, why the hell are you going to trust me? I'm just some talking head on YouTube. You shouldn't trust me. I could give you a strategy tomorrow. You could go out and do it. And if you don't know exactly what I'm talking about, you're probably still going to get it wrong. So what you do is you first go in to backtest it and see if you understand it perfectly, right? And your personality could be different, that you're not actually able to trade that way. You could be seeing it slightly differently. And this strategy could not work for you. For other means as well, right? It could just not be your personal trading style, but that's irrelevant. If you can't prove that the strategy works on its own. And what you do is you go and you backtest, and you type in the profit on each trade in terms of risk reward, whatever like this, as if you were actually trading using the TradingView app there. And then this way you actually know that the strategy is going to work when you are backtesting, right? It's very unlikely that you go into a backtest a strategy and when you come to live test it, after it's proven that it's working by a significant margin, it has to prove that it works by a significant margin, because generally when you're backtesting, you're going to be a little bit biased to it working. So you actually have to make sure it's working even better than you thought, plus it has to cover the commissions. So it has to be doing amazingly well. And if it's not, don't even live test it. And then when you come into live test it, that's when pillar number 3 is going to come into play. Like I said, pillar number 3 is the most difficult one. And this is the one that I can't teach you right on the spot. I can't teach you in a live stream like the strategy. This is psychology. And this is going to come down to you essentially. So when it comes down to psychology, you're going to have to find that balance of super Chad, where you're confident and you know everything, and humble monk. And you're going to have to become this humble Chad. This way, when you become a humble Chad, you at least are confident in your abilities, but you're not reckless. Because once you start becoming very profitable and winning a lot, you're going to have a lot of reckless trades. You're going to think you're very confident, you're going to be very cocky, you're going to go in on trades and do strategy slip. And that's something I like to call where you've already proven a strategy, but you start getting overeager, and then you're entering trades that aren't exact to the strategy, and you have this strategy slip. So it's kind of like slippage in the market, where it's not exactly the entry point, but it's close, and it's not ideal. And then this is breaking down your strategy, and then eventually your strategy is not working anymore. But the next thing is you can't be too passive, because if you are, then you're going to watch and you're going to see the setup that you know is part of your strategy, and you're just letting it slide because you're not confident enough to enter. So this is the problem when you get into a downswing. So very often what can happen is a situation like this is you find this strategy and you make it work, right? And then you keep making these trades, you're profiting, you're doing super well, and then strategy slip hits you. And you start slipping more and more, and then you're losing a bunch of trades now. And now you're not confident anymore. So first of all, you were that really cocky level where super Chad, and then now you've brought yourself down to this passive little monkey, right? And now it's going to be a battle of getting out of this state where you know the strategy works, but you're not able to execute on it. So on both ends of the spectrum, you're both greedy and you're fearful. And these are the two major things it comes down to when it comes to psychology, is balancing your fear and greed better than your opponents. Because this is just a battle between you and the other retail traders. You can't beat the banks, you got to beat the retail traders, take money from them. Take money from the suckers, just like playing poker. You take money from the fish, the loser on the table. You all gang up on the loser. And if you don't know who the loser is, it's you. That's all I really have to say about that, guys. If you like this content, please hit that like button and hit the subscribe so you can join in on those live streams, so you can actually learn some real strategy from a professional forex trader. Because I do have a strategy that works pretty well. I have a couple others that work okay, that I'll teach you as well. Not as good, but teach it all.